Well, let's get right into it. So, hey, today let's kind of talk about, a quick market update, and maybe May 10th is an important date that a lot of people are talking about. So, just kind of talk to that and tell us why that's important.
Sure thing. So Wednesday be May 10th, important date. A lot of people have been talking about this as an important day for interest rates, maybe starting to gradually move lower as we move throughout the course of the year. Reason for that is we're gonna have our updated CPI report that comes out. So our consumer price index report is going to be released on Wednesday, May 10th. That is the Fed's favorite measure for inflation. So it's going to actually be replacing a high reading from last year. We're expecting to see a much lower reading this time this year. So these reports lag. They're 12-month, looking back over the last 12 months. So we're expecting to start to see inflation start to come down. And then as we look at future CPI reports in June, July, August, those also have higher numbers that we expect to be replacing with lower numbers, and mortgage rates follow inflation. But as inflation comes down, we should see mortgage rates continue to decrease as well. This is not going to be something that, hey, May 10th hits and we get a massive drop in mortgage rates. This will be a gradual kind of step down as opposed to an elevator down here over the coming months.
Got you. What I think is important for people, because a lot of people see the Fed raise their rates. Mm-hmm. A lot of people think that affects mortgages, whereas the mortgage rate really follows inflation. It's kind of more based on the inflation, it's not based on Fed's raising the rate.
So the Fed rate's really kind of a short-term rate, right? That's what that banks lend to overnight. Whereas we look at longer-term rates are going to actually come down as the Fed raises their rates, which doesn't make a lot of sense to people. But we're more concerned on things like inflation with longer-term rates.
Right on.